So get this, yesterday I wouldn't have touched silver. Today, it pops 3%. And it leaves us with one massive question. Did we just miss the boat on the bottom? Or is this whole thing just an elaborate trap for our money? Let's figure this out.
You know, getting this right, it's not just a small win. It's literally worth thousands of dollars. And right now, the market is completely split. You've got two camps making totally opposite bets on this exact same move. On one side, you have the bulls, right? They're screaming, "This is it, the bottom's in, buy everything." And on the other side, the bears are yelling, "Dead cat bounce, don't you dare touch it, sell this rally." Somebody here is about to make a very expensive mistake. And in this breakdown, we are going to figure out exactly who that is.
All right, first things first. To know if this bounce has any legs, we've got to dig into what actually caused it. I mean, the reason for a market move. That tells you almost everything about whether it's going to last.
And here it is. The trigger was a single, fragile political headline. President Trump postponed the threatened strikes on Iran. That's it. Think about that. It's a political variable that can be reversed with a single tweet. Meanwhile, all the stuff that caused the 43% crash, it's all still there. This tells us right away the foundation for this bounce is super shaky.
So this brings us to a great analogy. Is this bounce a rubber ball or a raw egg? You know, a rubber ball hits the floor, bounces right back up, its structure is totally intact. That's a real bottom. But a raw egg, it just splatters. Yeah, you get a brief upward splash that might look like a bounce, but the structure is completely broken. It's going to end up even lower than before. Understanding this difference, well, it's everything.
Okay, so how do we know if we're dealing with a ball or an egg? We've got to ditch the opinions, ditch the noise, and use the same data-driven test that the pros use. It's a 5-point checklist that just cuts right through all the hype. So here's the plan. This is our roadmap. We're going to score 5 key signals, one by one. The gold-silver ratio, the COMEX inventory trend, the dollar index, the amount of speculative selling that's left, and finally, we're going to grade the quality of today's trigger. Let's get into it. First up, signal number 1, the gold to silver ratio. Right now, it's sitting at 63 to 1. Now, historically, the average is more like 47 to 1. So, yeah, silver is definitely looking cheap compared to gold. But, and this is a really big but, at previous major bottoms, this ratio has spiked way higher, like between 80 and 93. So, while this is a good sign, it's not quite a back up the truck screaming buy signal just yet. All right, signal number 2. What's happening with the physical metal? This is huge. The amount of registered silver in COMEX vaults is down a staggering 64% from its peak. This is one of the clearest signs you can get that this price crash is all on paper, not in the real world. Industrial users are seeing these low paper prices and just scooping up all the real metal they can. This is a very, very bullish sign. Signal number 3 is the US dollar. The dollar index, or DXY, is hanging out around 99.5. Look, it's pretty simple. Silver has a really hard time getting a sustainable rally going when the dollar is this strong. For precious metals to really take off, we need to see the dollar cool its jets and break this uptrend. For now, it's a major headwind. Okay, what about the speculators? How much selling pressure is left? Well, if we look at the open interest data, it looks like about 70 to 80% of those leveraged, hot money positions have already been liquidated. They've been forced to sell. So what does that mean? It means most of the damage is probably done, but there could still be one more wave of forced selling left in the tank. All right, let's pull it all together and tally up our professional scorecard. The gold-silver ratio? Mildly bullish. COMEX inventory drain? Very bullish. The dollar index? Neutral for now. The speculative washout? Cautiously bullish. And the quality of today's trigger? Fragile. So when you look at all this, it doesn't scream, "The bottom is in," but it tells us something absolutely critical. The crash is way closer to its end than its beginning.
And you know, this brings us to a really important point about how markets work. You have to remember that real bottoms are almost never a single V-shaped event. Nope. They are a process. And when you look back at history, you see a really clear pattern emerge. Just look at 2008 and 2020. In both of those crashes, silver got hammered, right? And it had multiple little bounces that failed, until something fundamental changed. The real, lasting bottom only showed up after a huge shift, like the Fed cutting rates to zero or announcing unlimited QE. See the pattern? Temporary political headlines cause bounces that fail. The real recovery only starts with a real economic catalyst.
Okay, so let's tie all of this analysis together. Let's get to a final verdict and, even more important, a clear, actionable plan that you can use based on your own specific situation.
So what's the honest answer to that big question we started with? Is it the bottom or a trap? Well, it's neither. Today's bounce is a signal. It's not a confirmation. It's the market whispering to you that the worst of the selling panic is probably over, but it is not the market shouting that the coast is clear. And understanding that difference, that's the key to everything.
So, the big question, what do you actually do right now? Well, there's no single answer. It completely depends on where you stand. So we're going to break this down for 3 different types of investors. Listen close and find the one that fits you. First up, for those of you sitting on cash, ready to pull the trigger, the message is clear. Do not chase this bounce. The scorecard just isn't strong enough yet. Your job is to be patient and wait for confirmation. What does that look like? Watch for the dollar index to drop below 98. Watch for COMEX inventory to fall below 70 million ounces. When you see those technical signals line up with a real fundamental catalyst, that's your green light. Okay, now for a serious one. If you bought near the top and you used leverage, I'm talking margin, futures, any of those leveraged ETFs, you are in the most dangerous position right now. The absolute worst thing you can do is just hold and hope. Seriously, another move down from here could wipe you out. The professional play here is to reduce your leverage now. Take a smaller, guaranteed loss to preserve your capital. That way you'll have money left to get back in when the real bottom is actually confirmed.
And finally, if you own physical silver with zero leverage, you, my friend, are in the position of maximum strength. You can't get a margin call. No one can force you to sell. So your plan is beautifully simple. Do nothing. You've already weathered the paper storm. Now you just sit back and wait for the real fundamental story to take over again.
All right, so now we all have a game plan. But what's next? What are we watching for on the horizon? What are those big potential catalysts that could give us the real fundamental trigger we've been talking about?
Well, we actually have a few key dates right on the calendar. On April 1st, India's silver mutual funds unlock, which could bring a wave of new demand. Later in April, we've got a key CPI inflation report that could totally change the Fed's tune. And then on May 15th, a new Fed chair takes over. Any one of these events could be the spark that lights the fuse.
And let's be crystal clear about what's at stake here. The source material puts it perfectly, saying the genuine bottom of this correction will be one of the most significant wealth entry points of this decade. This isn't just about catching a little 3% bounce. This is about getting ready for what could be a generational opportunity. So, today's bounce? It was a signal, not a confirmation. But now you've got the framework to spot the real opportunity when it finally arrives. You've got the 5-point test, and you know the upcoming catalysts to watch. The market is getting closer and closer to a major turning point, and now you know exactly what to look for. Comment silver down below if you're watching this move right along with us.